in this video. We're going to look at their earnings release. We're going to do analysis. We're going to take a look at the whole thing. So let's get into it. So guys, before we get into the report about Meta, let's do this quick recap of the company. First off, great balance sheet, 1.24 trillion market cap, 1.26 trillion enterprise value, very little debt, $20 million on freaking $50 billion, $20 billion on $50 billion in free cash flow. These guys, guys, high return on invested capital. Let's see what the 8 pillars tell us. 8 pillars. The only X's here are valuation. And guys, the thing is, this is skewed because look how much higher their 5-year net income and free cash flow, how much lower it is than their 1 year. Oh my God. And guys, they're burning through cash on this metaverse, burning $10 billion a year. Imagine they got rid of that. For everybody who hates the metaverse, get rid of it and you just increase their value by how much? This is an incredible company. Let's go look at some highlights from their earnings release that just came out. First off, 22% increase in revenue. Cost and expenses only up 7%. So you have a 22% increase in revenue, 7% increase in costs. Income from operations up 58%. Income taxes up 9%. Net income up 73%. EPS up 73%. Is that a dead company to you? Remember, news follows the stock price. You've got to sit there and be able to isolate these things. Active daily users up 7% year over year, 3.27 billion on average for the family of Meta. That's Facebook, Instagram, WhatsApp, Oculus, up 7%. They already have 40% of the world on their devices every single day. Every single day, 40% of the world. That's incredible. I saw something recently where they said 100 million WhatsApp users are now active in the US out of 340 million people, to which I said, yeah, it's every foreigner talking to their family back home. Because I asked my white friends, nobody has WhatsApp. Nobody does it. But whenever I ask my immigrant friends, yeah, I got WhatsApp. Everybody has it. You go abroad, everybody talks about WhatsApp. What's your WhatsApp? Call me. Let's do the WhatsApp. Absolutely incredible. Average price per ad increased by 10% per year, 10% year over year. Guys, remember, they haven't even scratched the surface on these ad costs. That's what's incredible. They're going to be able to build on that for so many years as the world becomes wealthier and wealthier. Great data. Revenue up 22% every year. Talk about cost and expenses. Capital share repurchases were 6.32 billion. Okay. Maybe that's okay. Maybe it's not. Depends how you value the company. But remember, we need to buy shares back at a low price, not a high valuation. It's value add to the investors if it's at a low price. Now, headcount, a decrease 1% at 70,800. Anybody here works for Facebook, Meta? Just mention the video in the comments below. Just wondering, I don't know anybody who works at Facebook. So that's why I ask. We might have to get your information. They expect third quarter revenue of 38.5 to 41 billion. So what did they do last year's same quarter? So income statements, go to quarterly. The same quarter would have been 32 billion. So they're looking at 32 billion increasing to 37.5 to $41 billion. Oh my gosh, this company crushes it. And a great balance sheet. This company is incredible. Now the question is, can you just buy it at a proper price? That's what really matters. That's the conversations that you guys need to be having in the community. That's why you need to be using these tools to help you make that decision. And I'm sure if you've noticed, we have a limited number of daily spots for our community and software. And the reason for that is, as it exists today, Everything Money currently has all the tools that we offer up here, every single one of them. But behind the scenes, we're making these changes because a lot of our users, as we talked to them, said they wanted to be able to focus on specific aspects of Everything Money that applies to them at that moment in time. We don't want to be the cheesecake factory of software. So we're going to limit the tools very soon. If you've been watching us since we started, this software back here built completely and selfishly for myself so that my team and I could use it to make better decisions in all aspects of our money. But the channel and the community have grown so much that it has to become less about me and more about how I can better serve you and the community members. Now, the good news is changes haven't been made yet. So if you join today at the link in the description below, You'll be grandfathered in for life with all of these tools. Guys, you'll get all of these tools for life. For life. It'll never be taken away from you, even if we take it away from new members that sign up later. This is the best deal we've ever offered. So if you're serious about making better financial decisions, increasing your returns, and sleeping better at night, click the link in the description below. Go sign up. I'm confident it'll be the best decision you made all year. Now, let's go see what the assumptions by analysts are. Analyst estimates. About a 60% growth in EPS over the next four years. Pretty solid. 40%, 14, 13.5, 13, and 6. What about revenue? 18, 12, 12, 10, 8. Pretty solid for a company that has 40% of the world. 40% of the world using their products on a daily basis. Think about that, guys. This is how much of a hardo Mark Zuckerberg is. They got a $1 billion offer when he first started out. A $1 billion offer as a 23-year-old, 22-year-old. Peter Thiel at the time was expecting to take that offer, to which Zuckerberg wrote an email after they got the offer and said, well, I'm assuming we're all obviously on the same page here that we're not accepting this offer. And Peter Thiel said, well, wait a second, let's get together and talk about this. And sure enough, they got together because Peter Thiel said, listen, you're going to get $250 or $300 million from this. To which Zuckerberg said, what am I going to do with that money? I'm going to want to build something else. So I might as well just keep this. Now, in hindsight, that looks awesome. The Snapchat people got a very great offer early on. They said no. In hindsight, they should have taken it. Same with Yahoo, AO, all these people have. Zuckerberg said, we're not doing this. And in fact, his comment was, this is obvious we're all on the same page that we're not going to accept this offer, right? It's just incredible the vision this guy has. He's an incredible visionary. Is he even 40 yet? I don't even know he's 40 yet. I think he's 38 or 39. Incredible, incredible visionary. So, what is the right price to pay for Meta? Let's pull this bad boy up. Last time I did Meta, only a week ago. 10-year analysis. So, I did 4, 7, and 10% revenue growth. So I went a little bit lower because the 10-year analysis versus a 4 or 5-year analysis. But look at this ROIC increasing. I love seeing that. This is good. Profit margin. I did 27, 31, and 34. I went higher than their 5-year average and their 10-year average because they've got a good gross margin here. Let's go look at this gross margin. This gross margin is 81%. Guys, you know how insane that gross margin is? 81% gross margin. That's higher than Microsoft. That's an incredible gross margin. So as they keep driving these revenue in, it's going to keep driving that profit at a much higher rate. I could hear somebody saying, Paul, this is too low. Probably is. I'm probably being too conservative. Now for PE and price of free cash flow, high quality business, great gross margin, 20, 23, and 26. And of course, I did my 9% desired return. 9%, because I want to see what this thing's worth based on intrinsic value on the market. But remember, if you have the software or you're going to get the software right now, make sure you put that margin of safety in there by putting a higher desired return. Your margin of safety needs to be there, or just buy an ETF. There's no reason to put nothing in there but match the market. And before we hit the analyze button, I want you to remember that quarter-to-quarter results do not matter to me. They crushed it out of the park on this one. Absolutely crushed it. What matters to me is buying a great company, and there are going to be bad times for great companies. Go look at any company in the last 10 years. They've had declines in year-over-year growth, increases. It happens. It's up and down. Don't make your decision based on that. Find a process, find a good company, and realize that the management's going to take care of business. That's what's important for you. So let's hit the analyze button. Analyze. I got a low price of 288, high price of 700, middle price of 460. So with some margin of safety, I have my watch list at 375. Doesn't mean I'm buying it there. It just means I'm going to add it there, take a look again, and possibly sell puts at that price. So guys, reminder, click the link in the description below. Join the community before we make our changes. Thank you for your time.